Gentlemen, welcome back to TLT Talks. Exciting time in the world. It looks like interest rates are moving. It looks like the sales market is picking up and is starting to be strong. Today, we have a very special guest for you, something a little bit different. He's going to be joining us any second now. I tell you, every time Instagram, I just want to be able to send an invite. Come on in. We'll be up and running. Well, let me just say to you that this guest of ours is a lending expert, something a little bit different to what we normally do. Commercial lending, that is. My notes here say banking and capital markets industry veteran, someone that spent 20 years in the business of banking and commercial markets, financing and strategies, over $1 billion of volume raised, 400 deals. Here he is. Three, two, one. Let's go Instagram. Starts again. 3, 2, 1. Let's go Instagram. Here we go. Mr. Alex Leykind. How goes it, sir?
Fantastic. How are you, sir?
Very, very well. I just told the people a little bit about you, lending expert, the $1 billion. I gave him the whole thing while we were trying to figure out this whole coming on business. But why don't you take a few minutes, tell the world who you are, what you offer. Tell us a little bit about yourself, my friend.
Well, thank you, Mr. Litvak, for having me on. Always a pleasure. So my name is Alex Leykind. I am the managing director of Equitas Capital Group. We are a commercial lending advisory firm. And what my firm does is we finance commercial real estate, all types of commercial real estate. Obviously, New York is home base, but, we could facilitate commercial loans anywhere in the United States.
Love it. Very cool. I said I would do this. Give us a fun fact, my man. Give us something most people don't know about you.
So that's great. Great question. So because you asked me such a great question, you're going to be part of the answer.
Damn it.
So
Here we go.
So I don't know if a lot of people know this, but Eugene and I actually many years ago, when we were both starting out, actually worked in the same office for like 5 minutes when we were 20 years old.
That's true.
So that that goes back a lifetime.
Statewide properties. Who would have thunk it? Here we are today.
Fast forward.
And also, by the way, for anybody watching, easily best dressed guest on TLT Talks probably ever. Well done, sir. Well done,
Thank
sir.
you.
Well done, sir.
We learn from the best.
All right, well, let's jump right in. So in layman's terms, Alex provides financing for the non-residential stuff, for the commercial sector of the market. So why don't we start there? I believe that there's many people that are going to watch this that have absolutely no idea what that means. So maybe let's just start basics. Commercial lending 101, what is it? Just give us a walkthrough.
Sure. So very large topic. But, I always like to start off explaining what a commercial loan is. And commercial loans or commercial mortgages in their very, very basic conceptual core are business loans. And people need to understand. So I guess the foundation of commercial lending is whether it's a business or whether it's a property, a commercial property, the underlying theme is that it will be analyzed and underwritten and evaluated as a business. So same way as you want to go buy a grocery store and you're going to analyze the tax returns and the financial statements and the P&Ls and everything else, that is exactly the same way that commercial real estate is underwritten. Because every individual commercial transaction, every commercial property is technically a self-sustaining viable business with physical bricks as your collateral.
Right.
So
right. Yeah, I mean, essentially, someone that's buying commercial property is, in essence, buying a business. It is, in fact, buying. It is an asset. It's what I say to people. One of the greatest thing about purchasing real estate, it's the only asset class that gives you all three. You get appreciation, you get income if you buy the right assets, and you get depreciation. I mean, yes, the S&P index is the best performing over 50 years. That is true. But you don't get depreciation and you don't get income from the index, you know? I mean, and so It's what makes real estate just so valuable. So how is this very different from residential financing? What makes the commercial process, the analytics, the evaluation process, what makes that very different?
Sure. So actually a loaded question. We get that question asked all the time.
Mhm.
So it is completely two different spheres.
Right.
Okay. On the residential side, it is if the entire transaction, as I like to say, goes from 0 to 100, um, the person, the buyer, the borrower, makes up 85% of the equation.
Mhm.
It's their income, their credit, their tax returns. Don't go buy a Mercedes before you buy your new house. It's not cool, right? We've all had those experiences, right? Because why not, right? Don't you need to park your Mercedes in your new house, right? So that's not a good thing.
Those are the
But
best. So hold on, something's wrong. Your bank just called me and said you just took out a new loan. Yeah, I got a car. What do you mean you got a car? What do you mean you got a
well,
car?
how are you going to drive to your
Good.
new house? It makes logic sense, right? Doesn't it?
So
To
good.
some people,
So
to some
good.
people, to some people. But it's 85% driven by the borrower, right?
Right.
So everything's on them. The property itself makes up 10 to 15% of the equation,
Mhm.
where as long as the property is habitable,
Right.
physically, you could live there. And as long as the property appraises, then the property kind of does its end of the piece.
Yeah.
On the commercial side, we're going to flip flop it, where I care 80% about the borrower, I'm sorry, about the property,
Mhm.
and 20% about the borrower. Because in commercial lending, we care about the business
Right.
and the cash flow.
Right.
And the building and the property, the building and so forth generates the cash flow. The borrower, actually, this is the unique thing. So the borrower does not qualify based on their personal income.
Mhm.
Commercial loans are going to be based on the cash flow and the debt service. A lot of people
Mhm.
heard recently those DSCR loans,
Mhm.
debt service coverage ratio loans. Well, every commercial mortgage is a DSCR loan.
Mhm.
So as long as the borrower, the human being, has good credit, has a strong overall financial profile to to play in the league that he's trying to play in, right?
Mhm.
And as long as he meets that end of the bargain and the property cash flows, that's where the puzzle comes together.
Yeah, it's very
So
cool. What Alex and I chatted some time ago when I was looking to acquire my first piece of real estate, and I was like, and I'm all real estate residential broker. I got my tax returns, I got my detail, and he's like, pause. I don't care about any of that. Like, what do you mean? I spent my whole life building up this profile. What do you mean you don't care? It's no, like bring me the property. Let me look at essentially, because essentially we're lending against the business. Yes, of course, you want the owner of the business not to be, financially challenged, but ultimately, it's as Alex says, what the banks are really looking at, what Alex's office is really looking at is I'm an investor now in this business. Do I feel comfortable investing into this new business venture? So that was interesting, and that trips a lot of people up. Someone that's bought condos or buildings or residential, anything, someone that's bought anything residential is so accustomed to this thing of DTI and down payment and LTV and these sort of things, and then you step into
the fun
this
things,
here, the
right?
fun
The
things,
fun
and then
things.
and then you step into here, and you're like, yeah, I'm good, I'm a veteran, let's go, and it's like, oh no, none of that matters, like at all. Well, so talk to me about this, Al. What are some of the types of commercial lending? What are some of the type of assets that you see purchased? What are some of the types of commercial lending that gets attached to those assets? Let's go again. I'd love for this to be a little bit of a one-on-one for someone that maybe has some saved up cash and instead of buying a regular residential condo, might want to go in the sector of commercial building and whatnot. So walk us through that a little bit, kind of what you see.
Sure. So the unique thing about commercial, and this is kind of, the first tidbit of information, is that there are many, many different commercial asset types that fall under the commercial lending umbrella, right?
Mm-hmm.
So mixed use buildings, multifamily buildings, industrial buildings, office buildings, single tenant buildings, construction, rehab,
Mm-hmm.
transitional properties, redevelopment. So it's very, very important for everyone to understand that every asset type in commercial lending, they kind of have their own underwriting guidelines and they're
Mm-hmm.
analyzed a different way. So a mixed use building is going to be analyzed differently than an office building. A
Mm-hmm.
multifamily is going to be analyzed differently than a industrial building and so forth.
Sure. Sure.
And the major premise for that is because, banks will consider certain asset types, certain verticals. Some are higher risk, some are lower risk.
Right.
And in my world, it's very, very simple because interest rates and lending and loans are all a direct correlation to
Right.
risk, right? If a bank takes higher risk, we push the envelope on LTV, if a transitional property to construction loan and so forth, then the banks are going to want to get paid a premium for the assumption of higher inadvertent risk. Goes the same the other way, right? So, for example, multifamily properties. I know multifamily is a fan favorite.
Mhm.
Everyone wants to own 20,000
Yep.
units. Now, multifamilies are in the bank's eyes are considered very safe investments.
Right.
Multifamily almost became a commodity in the commercial lending
Yep.
game, where you have a 30-unit building, one tenant moves out, and right, it doesn't rock the financials of the building.
Right.
Because remember, going back to the original point, that commercial properties have to sustain and stand on their own merits from a cash flow
Right.
standpoint.
Right.
So if it stands, it stands.
Right. So then a question. This is when I get asked a lot. At what point? So let's say you're buying, two family, three family, then it becomes 4 units, 8 units. At what point are you navigating from residential financing to commercial financing? What's the minimum unit count for a commercial finance building?
So great question. The lines were always kind of
Blurry.
very
Yeah.
definitively drawn, but
Yeah.
now those lines are starting to blur a little bit. So, the rule book is 1 to 4 family are residential units,
Right.
are residential
Right.
properties. And then anything above that is commercial, or
Right.
if there's, a store into apartments that's mixed use, that's commercial,
That's right.
right? Construction is commercial.
Yep.
But because of the, I guess, evolution of real estate, we do have the ability to underwrite 2 to 4 family properties with a commercial flavor, meaning that I will, and I could underwrite them as multifamily, right? So I could base the entire deal based on the individual property's cash flow. And
Interesting.
if we treat it the commercial way, then the borrower's DTI doesn't really
Right.
matter that much, right? Because it's based on cash flow. That's a good thing, right? But the
Sure.
negative of that is that, a lot of people that kind of scale up from residential to commercial, there's always a little bit of growing pains, such as,
Sure.
people think that they're going to get a 30-year fixed mortgage. In commercial, there is no 30-year fixed mortgage, right? So, it works a little differently, but
Yeah.
there's definitely products and,
Yeah.
that's,
Yeah. Well, if you're someone looking to finance and you can afford the traditional financing sector, that probably works. But if you're someone that can't, for whatever reason, something, there's a debt to income issue. I'm just, I guess, saying reach out to Alex as a second option and see what's possible there, which is a good segue to trends. Big day yesterday for the world. I was going to say the real estate community, but really for everyone. The rate drives so many things. So you're the guy, there's all this information you hear about the commercial sector, about retail leasing, about buying of buildings, about it's up, it's down, it's this, it's that. You're the guy that's writing the loans. And so I can't imagine a more accurate source of information. So let's first talk before yesterday, right? Before, like, what have you been seeing? Is the market strong? Is it bad? Is inventory healthy or not? Just sort of high level, anything you want to share
sure.
about, what you've been seeing. And then after, let's chop that up for a bit. And then maybe after about, what your crystal ball says with this rate adjustment. But let's first start in the past. What have you been seeing?
So, um, in my world, it's all dollars and cents, right? And that's one very important thing for all the viewers to understand is that, if someone wants to play in the commercial game, they need to understand that, the view of observation is going to be very different, right? You're going to look at things impartially because you're buying a business, right? So you're going in for dollars and cents. You don't care if the kitchen's yellow and you can't see yourself eating breakfast in a yellow kitchen, right? That's where Mr. Litvak comes to help and finds you a red kitchen, right? Um, but I think commercial real estate absorbed the fastest rate increase in American history extremely well.
Mhm.
I think commercial real estate really got a bad rep. But it's very important for people to understand that commercial real estate is a very subjective matter, specifically pertaining to, markets and submarkets. So, all the, you know, hoopla that went on last year that there's going to be a bubble and commercial real estate is going to burst and, all this
Mhm.
stuff, it never really came,
Right.
right? Yes, there was absolutely pain, right? People had to sell, people couldn't refinance, they had to take, cash into loans. All of that did happen and is still happening, right? And yes, absolutely correct that commercial banks really clamped down, and underwriting is very tough. So there's no sugarcoating it. Um, but banks are still lending,
Mhm.
right? It's just with a much higher degree of scrutiny. And a lot of people, forgot already, but the reason why commercial lending is this way is because three of the largest, probably top 30, maybe top 50 banks in America failed. And don't forget, that was in the last 12 months,
It's
right?
crazy.
So, if people don't understand the context of that, so you put them three together, it's like a Lehman Brothers
Yeah.
moment, right? So
Yeah.
that just makes logical sense why the industry kind of clamped down.
Yeah.
But as the rates went up in commercial banking, numbers have to always everything in lending has to stay in balance. So what happened was that as rates went up, cap rates went up, right?
Right.
And cap rates went up across the
Right.
board. Now, obviously, skewed in certain more aggressive markets, such as New York, but cap rates went up.
Sorry, Alf,
And
can you just take a second for someone that may not know what a cap rate is? Just very quick, what's a cap rate?
sure, of course, sorry.
You're
Cap
good.
rate is capitalization rate, which is your rate of return. So,
Exactly.
if I buy this building after I collect my income and I pay all my expenses, what am I going to net?
Yep, exactly.
And based on my cash investment, what is my rate of return?
Yeah.
5%, 6%. So cap rates, if for those that don't know, the higher the better, right? That's your
Yeah.
higher return. Um, but what happened in the last year was a lot of the, very walk the line spec investors that, really pushed the envelope, they were all washed out,
Hmm.
right? Because they kind of walked the razor and, they can't take a 10% market fluctuation. And that's a
Right.
very dangerous way to do business.
Right.
But all the, career real estate investors and so forth did extremely well
Yeah.
because, they are, solid investors, they have solid financials, and they took, reasonable leverage points. So they weren't walking the razor.
Yep.
And, they bought properties one after the other,
Yep.
and yes, their cost of borrowing was higher, which hurts, but they also got, eight caps in New York.
Yeah.
So, for
Yeah.
people that don't know, historical cap rates in New York are 4, 5,
Yeah. 4 or 5. Yeah.
maybe 6, but
Yeah.
you were getting eights.
My business coach says I just came back from Texas. I go there 3 times a year for this business coaching platform. That's really cool. And I've heard him say this many times, but now again, most recently, a poor market conditions do not cause businesses to fail. Poor market conditions expose weak businesses.
Amazing,
Right? I love that. I love
amazing,
that saying. If you're
amazing.
in position as a business, if you play defense, if you're not over leveraging, if you're careful, if you've got optics, if you're not gambling, but you're running a business, poor markets and oftentimes can be an opportunity, especially if you're a building owner, if you're in commercial real estate, if that's your game, then as soon as the terrain gets kind of tough, and you got some cash. I mean,
Listen,
that's Candyland. It's
I can I can tell you like this that our industry is very cyclical, right?
yeah, of course.
And obviously, depending on outside inputs such as COVID, for
Right,
instance, right?
right.
Stuff happens. The cycle is what, 8, 9, 10 years, right? That's the cycle.
That's it.
So, a lot of our biggest clients that, have amassed or built, 100, $200 million portfolios, um, they doubled down in down markets and then they doubled up,
Yep.
and on the
Exactly right.
upswing. So
Exactly right. Well, all right. So that's the past. That's very valuable. Thank you. So the Fed went and cut the rate 50 basis points, unheard of. Not in a long time have we seen something like that. What do you think? What does this mean for your segment of the market? I mean, for us, I'm already seeing increase go up. I'm fully expecting an insane Q4. Whatever listings I might have any concern about, we're launching a 16 new development in Astoria. Wherever I was on the fence, I was like, all right, we're gonna be okay now. I'm excited. I'm gearing up for a busy end of the year. Is it similar in your business? What do you see with this rate adjustment?
so this was coming. You know, September was the booked month, and you know,
Mm-hmm.
Chairman Powell did his piece. He kind of, you know, projected it
Yep.
forward. You know, in my world, the market factors in, you know, expectations. You know, and at a certain point, it was if he's going to do it, and then it
Mm-hmm.
shifted not if he's going to do it, but what he's going to do.
Right.
So he went against consensus. Everyone was kind of planning on a quarter,
Mm-hmm.
but he went 50,
Yep.
and you know, I thought it was a aggressive move.
Yep.
But he also kind of gave himself a like a, you know, exit stage left kind of deal,
Mm-hmm.
because if things don't, you know, even out, if there is a blurb on the radar, then he might not have to do another one,
Right.
right? So he kind of hedged himself.
Yeah.
Now, and you know, once Chairman Powell lowered the rate, we've probably gotten 500 phone calls.
Mm-hmm.
Very important for everyone to understand that, you know, the Federal Reserve and Chairman Powell lowered prime rate.
Mm-hmm.
And they lowered it by 50 basis points. Now, very important to understand that prime rate impacts only floating rate mortgages.
Mm-hmm.
So in a commercial world, construction loans are floating rate loans, right?
Mm-hmm.
Bridge loans are floating rate loans. Lines of credit are floating rate loans. So, and prime was held by the Federal Reserve at 8.5% for most of the year. So if you're a developer, your construction loan next month just got 0.5% cheaper.
Yep.
It does not mean that long-term interest rates, such as, you know, residential mortgages or even commercial mortgages, it does not mean that rates yesterday just came down by 0.5%.
Right.
Um, Long-term debt, whether residential or commercial, is based predominantly off treasury bonds,
Mm-hmm.
which are also issued by the Federal Reserve. And treasury bonds, if you kind of see how they've been trending, and most of the residential for your world, predominantly, most of the residential loans are based off the 10-year treasury. 10-year treasury's been expecting this execution by Powell, and the treasury's, you know, floated down probably 75, maybe 100 basis points in the last month too.
Right.
And actually, after Powell spoke, he went up a couple of basis points, which is, and that's
Mm-hmm.
already standard
Right.
deviation. But I think this is going to be a sign to come. You know, my personal, humble, irrelevant opinion is that, you know, um, all the borrowers and the buyers think that, you know, they're going to wait for the 3% rates. You know,
You have those
I,
too. You have
yeah,
those too.
yeah, yeah. I'm going to wait for the threes. I'm going to wait for the threes. I get it. That's
I'm
cool. I
holding
would
out.
too.
Yeah, by the
You
time you
know,
get to the threes, the market's going to be up 50, 20, 30%, you know,
listen,
if we ever get
you know,
there.
I would wait for the threes also, I'll be
Yeah,
honest.
yeah,
But, I've been doing this for 20 years. Threes are once in a lifetime anomaly.
yeah, I think so
You
too.
know, I mean, maybe there could be another COVID, you know, no one knows.
Yeah,
But my humble, irrelevant opinion is that I think rates are going to settle somewhere in the probably 2018, 2019 levels right before COVID.
right.
And if you remember, rates were 475
Yep,
to 5.5.
yep,
And I think that's absolutely fine. I think that's sustainable for the economy.
for sure.
I think it's sustainable for real estate. Um, and if you look at it, you know, financially as an economist, that's kind of where they should be,
Yeah,
right? That's a sustainable, you know, debt
yeah.
load
The
because
banks have to
everyone,
make money too. Like we don't want the banks to fail. The banks have to make money too. Everyone's got
listen,
to make money.
but one interesting tidbit is a lot of people don't know is all the COVID money that was printed by the Fed, right? That was structured as loans. So
Mm,
the federal government has interest payments on the first, like you get your mortgage payment on the first.
nice.
So inadvertently, they just lowered their own mortgage
Right.
payments. That's
Right.
it. That's a nice little tidbit, or that's a nice little control to have, right? You could lower your own interest rates.
That's it, right? I love it. I love it. All right, my friend, we got a few minutes left. Any tips you want to leave with people? I'm thinking about buying a building. I've bought apartments in the past. What should I think about getting sorted? What, in the way of paperwork, in the way of information, before I call Alex? What should I have sorted? And also, any tips, any final advice for the new borrower or the advanced buyer borrower? Anything you want to, any of your wisdom you want to leave us with?
Sure. So I'm going to answer that in two pieces. Bless you. I'm going to answer that in two pieces. I think for the more sophisticated investor, because of how tight banking credit is, I think every investor should apply a very conservative approach to their underwriting, because the banks are going to do so.
Mm-hmm.
So this is not the time to kind of, push for the pie in the sky, and, if the world goes the other way, then this is going to happen.
Right.
This is not the time, right?
Yep.
You got to go very conservative.
Yep.
For the new buyers, I would say, make a decision within yourself, because there's so many commercial asset types. Where do you want to start,
Mm-hmm.
right? My recommendation is also, if you want to play in the commercial game, then, start with a smaller mixed use building. If you're going to play in New York, right? You will develop a flavor. You have some residential tenants, you have some commercial tenants. You're going to learn in real time. Do I rather deal with the residential tenants? Then you could potentially skew your kind of avenue toward multifamily, right? Or keep going larger mixed use.
Right.
Or if you like dealing with the commercial tenants, then, you could go commercial, industrial, office, whatever. So there could be, a lot of different, options or opportunities. But I would say make a decision within yourself. Get your financials in order. And then, on the commercial side, we don't pre-approve borrowers like they do on the residential, because I care about the property. They care about the borrower, right? So pick a vertical you want to stick to, get some of your personal tax returns together, and then, go online, pick a property, right?
Yep.
And what we do for new borrowers is we'll run a test case for you, right? We're going to show you how the game works. We just need a starting point.
Right.
And we'll show it to you, and then you'll kind of understand the trajectory and how this works. And then, we have clients that send us, deals that they're looking at every 2 days.
Love it.
Because they're actively shopping, and, our team is here and glad to, underwrite deals, size them, and give, all our clients fair and, unbiased input. Sometimes a little harsh, but we don't sugarcoat things.
And I was just gonna say, and I can speak to that firsthand, where when I was first looking into all these things, I called Alex first. There was a shell shock of what do you mean my financials don't matter? Then I brought a couple of buildings to him, and he's like, nope, that's trash. Nope, no way. I'm like, damn it. All right, fine. So if I'm hearing you correctly, it sounds like you're saying first call the Litvak team to help you find and source the property, and then let's call Alex to figure out the best way to finance it, the most economical, efficient, effective way to finance it. Alex, what an absolute pleasure to spend some time with you today. Thank you.
Pleasure.
If people want to find you, how do they do that?
So they could go to our website, equitascapitalgroup.com. They could, we'll post some of my cell phone number, my email, everything in the, in the tags down, below, and we'll be glad to assist anyone anywhere we can.
Awesome. And from my personal experience, not only of working with Alex, but recommending him, the thing to find difficult in both of our markets is things like integrity, honesty, transparency. If I've already got all the duress of figuring out what to do with the real estate, I don't want to guess whether my advisor is being forthright with me or not. And I'm just going to say to everyone watching this, there's no question about that here. Alex is of the utmost integrity, honesty, transparency, customer service, all the things you want. Alex, thank you so much, man. I really appreciate it.
Pleasure's all mine. Thank you.
See you, brother. Have a good
Thank you, everyone.